Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, June 26th, along with our President and CEO, John Moussea, Director of Fixed Income. This week on the equity side is everything you could ask for. You had rips higher, dips lower, still a growth over value market. What do we like in here? Continue to like tech, continue to like healthcare, coming around to industrials on this pullback. Main concern, financials. Financials, that bid keeps fading. And not that the markets, index or other sectors, can't rally without the financials, but they tend to rally better with a bid in financials. So we'll keep an eye on that. We have mentioned the last couple of weeks on our video that the options market was showing us a little bit of greed having crept in the call features. Aggressive call opening in the month of June. Some of that froth is coming off now. We'd expect to see some pretty good demand in multiple sectors and indexes in perhaps call it the S&P 2930 to 2970 area. Remember, a pullback to that spot is a 5 or 6% run-of-the-mill pullback. It's how the market acts at that level. Too many times people draw lines in the sand and decide that that's where the market will pull back to. We don't know where the market will pull back to, but what we want to see is some demand come in at that level if we get there. So we do have dry powder in our U.S. equity strategy to the tune of about 10%. International, a little bit more, about 13%. Our tactical strategy, we're close to 30% cash. Probably going to be looking to add to some of the names that have been working in there. Just like to see a little more of a pullback to lower that risk. John, fixed income this week?
Yeah, thanks, Matt. Treasuries this week, lower in yield. Yield curve, a little flatter. So think about the 10-year bond going from 0.7 to 0.65. Think about a 30-year bond going from about a 146 to a 140, maybe even a 139 as we speak. This flattening concern over reflaring of the viruses in a number of southern states, Florida, Texas, anticipating possibly another slight downdraft in economic activity. Our assumption here at Cumberland is that if we have reflare-ups, you're not going to see total shutdowns like we saw before. You'll see people working through it, but with a much stricter social distancing regimen in a number of states. That's our thoughts on how this will continue. On the muni side, easy week. About $8 billion in issuance, like a hot knife through butter. All the deals well subscribed for. And when a cheap deal comes, it gets way oversubscribed. Case in point, there was a fairly large Birmingham, Alabama airport issue this week. A- on its own, qualified for insurance from Build America Mutual, so it had a AA rating. Think about an airport as a pandemic-affected type of security. They brought bonds out in 20 years, 2040. 4s at a 260 yield. That sounds pretty much where you might have been at the end of last February, give or take. Certainly a heck of a lot more expensive than if we were talking in March. But here's the key. The 20-year Treasury, as we see here, is a 114. So when you think about an insured bond at a 260 to a call date and the yield to maturity even higher, that's how it becomes 18 times oversubscribed. So there's plenty of demand for cheap municipal issuance, and when you see those deals, they get gobbled up. And I think another thing that's happening is you're starting to see retail investors gear up for what they know is a pretty big July 1st coupon reinvestment period, with bonds rolling over and maturing, bonds being called, and large amounts of coupon payments being delivered. So that's from here. We expect to see more of the same as we go forward into the next holiday week. Thanks a lot.
Keep in mind, next Friday the markets are closed. It's July 3rd, but closed for the July 4th holiday on Saturday. So we'll be with you on Thursday. So pick out your levels equity-wise, have a reasonable risk reward on some of this pullback, and try to look through some of these nasty headlines, both COVID and trade related, from China and Europe. We'll see you next week.